Yo, yo, what up, everybody? Alright, just let me send out another message. Yeah, bro, I got fish and chips, man. Just quickly ran down and got some of them. Took the dog for a walk. What we're gonna do is today too, look, I've done this on YouTube anyhow, so we can record it. We'll set more of a structure up, right, for the future. I will pick some some nights, preferably off. I will preferably pick nights, right, and and on certain days, right. Now the days won't just be to suit my schedule; they're going to be to suit the market schedule, right. So we'll pick certain days that will benefit us better for the market, right. Now, in today's lesson, I'm going to teach you all about candlesticks, about M's and W's and the patterns, and how I'm going to teach you about them is through EMAs, right? And that's these lines that you see. I'm going to delete these boxes and all the other unnecessary shit. Right? I'll call it shit because all this stuff is to trick you, right? And the bigger you, the quicker you understand, you know, and even I do use stuff, and I use these boxes and stuff for references to know where the normal people are trading, right? Now, for anybody, you got a pen and paper, or you know, you're following along with your own laptop, you want to go to a website called TradingView, right? TradingView.com it is. Okay, now go on there, get yourself a membership, right? It's free. And then anyhow, so on your right hand side you will have your BT, your Bitcoin and stuff like that, and you can add your different pairs. But you should have you have Bitcoin on the right already, right? Now, after you've done that, you need to click on indicators, right? And what we're going to do is we're going to type in traders reality, right? Infernex. And what you need to do is you need to add these indicators, press on them and add them. Now, these are indicators that they're not my indicators. They're not even traders realities. They're we don't even know who the guy is that made those indicators. He didn't make them for TradingView. He made them for another program called Metaphor Trader, and that was for Forex, right? Now, I'm going to teach you guys about candlesticks, and when I go over candlesticks, you're going to start to understand a different view on candlesticks in general, right? Because, let me explain first. So, let's go to let's go to a time in the chart where, before we even go over what's just happened recently, right, with all this, let's go in, let's dive in, and let's show you. So let me delete everything off my chart. Alright. So what happens when you just, as you go in time, you start to notice, look at all the dots I've left here, you know. Alright, so a good example of this is about here. Okay. Alright. Let me start this lesson for you now. Alright. So this is where we get started, alright? So everyone get ready, dial in, focus. I hope you are all ready. For anyone who's just joined, we need to make sure that we are on TradingView. We've got the Traders Realities indicators can be found at your indicator part. Click there, type in Traders Reality. Infernex, that's the creator of the indicators, and then you go from there, right? Add them in, they'll load up. Happy days. Now, for anyone who wants to come to here, it's about the 7th of November. This is where you want to come to. We have got my chart up here as an hourly, right? So make sure you notice that you can do things like that. You can change the timing. Alright, now this will display candles in a different view, right? I'm not going to get into that. That's more novice stuff. I'm going to first get into straight up what a candlesticks are, right? So, what is a candlestick? You know, candlesticks are a broad range of things. You know, people's perspective on a candlestick may be different to what my perspective on a candlestick is, right? Now, the traditional candlestick is, you know, when it's green, it means that it's bullish, right? It means that you buy. That's what most people consider a green candle. And when you see red, it means you're selling. Alright, we're all on the same page there. So, why does once price, I'll delete this box too. I'll tell you why I put them boxes there. But why does price pull back? Right? Is it because it's because there is a marketplace, right? And that's exactly the reason why it's coming back here, because this is all a game. This is a game played, and what it is it's money. It's pools of liquidity is transferred from one stock into another, right? And you've got to, when you realize that money, okay, there's so much money in the world and it needs to be transferred around, wealth does. And they use it and they gain more money and more wealth by transferring their money around, their pools of liquidity, from one asset into another, right? And then you got to understand that when they prop an asset up, that money doesn't get created from somewhere else. It comes out of another stock or somewhere else to be put into there. All right? And then that's over the whole scheme of the whole world. But then when you just go into trading Bitcoin or any currency, any pair, anything, gold, whatever it is, you will start to see that they do the same thing, because there's someone providing for you to buy that green, right? And to say, oh, I'm bullish for it to go up, so I'm going to buy the green because it's green now. For you to buy that contract, someone has to sell you it, right? Now, it's not just everyone's buying and selling. There's not that many contracts taking place. What it is that there's a market maker in between, and he initiates every trade for us, right? So any buy or sell, he will counteract it for you. So when you're putting a long on, so what a long is that when you're going long this way, he's going short, right? Now when he's going short here, how's he make money? It's because when the green, so this is with these candlesticks, you'll see that some greens are more green and some reds are more red, right? Now these green candles imply that volume is above average, right? So the volume right there, the trading, the pairs, and the amount of trades that happen are above average, right? So how's that happen? Market maker pushes in more volume, right? Which then makes day traders, or your retail traders that are like me and you, we're normal people. Us retail traders, we jump in because we think it's going long now, right? We've seen a green candle and we're happy. So we jump in to a trade. Now, they're selling us that contract. Now, what will happen is they will let us keep selling up. They'll keep selling contracts and helping also the volume pick up. As you can see here, it's where it happens, and they initiated it more hands of volume. So people it was selling, it was dying off, but then bang, they initiated more contracts for us. Now, why would they do that? Because they want to get their shorts at the highest possible price. So they keep pushing it up. Now, blue candle means that volume is just starting to go above average. So sometimes they can do that to get the last bit of liquidity, last hands to jump in the trade before they sell. So these people here, so that they're buying, they need to sell. And they sell, when it's going above average, they sell a shitload to then start sending it down. Now here, they're putting longs on, right? To fill these trades. Now it goes down. Now what happens here? This is your one, this is your three hits to the high. 1, 3, 1, 2, and then 3. So what happens here? They go up here, stopping volume hits. They put they bang, spike it up to induce traders to go long again. Oh shit, it's going up. You feel as if you were watching this play out, you'd be thinking, well, yeah, it's going to go now. So they all jump in, and what it does is it does that stopping volume candle right up the top there. You can see that long wick, and then bang, they drop it down. Now, as you'll see, they come down and they spike these pools of liquidity again, right? Now the red, and then when these red candles hit, so as it's going up, they're putting their shorts on, and as it's going down, they're putting longs on. So going long, long, long. And if you notice, watch this. Even though it goes all the way down, alright, now what's happened here? So now I'm going to explain to you about EMAs. Now what it does is, these are moving averages, right? So let's get an example here. So under a moving average, you will see there's these M's and W's occur, right? So this is this. So let me change the color. Alright. So yep, and then consolidation, right? Now what they do is, you'll start to notice that they do these M's and W's always. They do W's below the EMAs, and they do M's. My computer's going a bit slow now. Alright. Let's give it a second. Wow. My computer, man, struggles with the streaming sometimes. I've got a nice Mac too, but it struggles sometimes. Alright. Now you'll see that up here, I'm just going to draw this because oh no, should be right. This thing's not playing up a bit, you know. Yeah, and down, right? Now, these are the hits to the high. The first hit would be, you know, there or there, comes down, hits again. So 2 hits to the high there was there. 1, 2 hits, and then, or 1, and then 1, 2 hits, and then strikes down, right? Or you come back up here and try to break through again. So 1, 2, 3. This is it trying to break up, keep above these, those EMAs, and it doesn't. It fails, strikes down. Now, it's all this is about is you got to put the time and effort into these candles, right? And what we'll do is we will study these, and I will actually put out plays for you guys to trade, right? During the week, we'll do them. We'll do longs and we'll do shorts. So I'll teach you how to set up an account too. So I'll send you all out a message on for anyone who doesn't know how to leverage. So look, you'll see W's are formed. That's a big W down there. And then it spikes out of the range. So market makers initiate, you'll see powerful candles down. It's because it's trying to send price down to make people put on more shorts. Now it can keep going lower and lower. You never know when it stops. That's why you got to wait for these signals for it to come up to up here and then go up and then pull back, and then you can know that's when the continuation is going. It's coming all the way up, bang, 1, 2, 3 hits to the high. That's how you knew it was going down. And then once it hit here, that was the last hit to know, all right, this thing's 1, 2, 3 hits to the high, failed again, down. Over here, we would have known down here. Once it came out of the EMAs, so that's those lines there, comes out, W formation, comes up. Now what it does is when the EMAs are all there joining together, that's when it consolidates. Now what's that doing? That's the market makers. They're picking their trend. So depends how many people go long or short or whatever. They find whichever best way the liquidity suits them to send the price, right? So they would have known that, hey, we need to initiate this. We're going to initiate more shorts. We want to buy our longs at cheaper prices, and then we're going to send it higher eventually. So see how I showed you before that those candles up there, they came back and redeemed. Usually they come back, so that's why you see all these spikes down. They're coming back and getting pools of liquidity. Now this is the market maker's trend. I'm going to show you the pattern. This is it. This is the game, right? Now when you zoom out, you'll notice that this is what applies. W formation under the EMAs, remember? It forms. So it's came all the way down, right? On the left-hand side. It's gone up. And this just keeps hitting around those EMAs, those blue and those blue lines. There's the blue one and the white line. The blue one is your 50-day moving average on the hourly chart. Okay, so now it comes out, breaks away from the 50-day moving average, comes back, hits it, doesn't fail the W there, goes up again, comes back, and then this is that little, see just under me, that the chart doing here, done this sort of, the M. Comes up, goes here. Now, the M, the right side of the M can come up shorter, or it can go above, longer, right? To entice, and they might be able to send it up. It just depends. They know how much liquidity, how many people are going in and going long, right? And then it comes down, back up, sorry, what am I doing? Yeah, that's like that. Because it's lagging a bit on my end. And then, boom. And what you'll see is, you'll see this pattern form a shitload. Now, why they do that? Because they're coming back. Don't mind that last little part there. They are coming back and getting pools of liquidity. And the reason they're coming back down is they're nipping. They come down, halfway through. They come down, they nip these pools of liquidity, right? So let's go into this one here and we'll have a look. And then we'll go over what actually happened over the last week in the market, how we could have exploited and how I exploited it this week. All right, I went short. I remember I actually posted up, I said that certain ranges were going to happen. Now, it doesn't mean I'm taking all my money off the market. It means that I had money and then I went short. Right now, I'm actually in a long, and I bought this bottom because I think we're going to go back up now. We're going to go back up to 50,000. We're going to go back to 100,000. I don't know. But in the short terms of things, I only need to go up to about 48,000, and I'm making $500, right? Depends how much leverage you got. Depends how much money you want to put on. I'm only going small leverage at the moment because if you've been in the game and you've traded with big money, it gets very stressful, and you can wreck your account very easily if you become emotional. So it is good to always keep the emotions out by keeping your risk management, so those emotions don't get into play, right? It's like you're losing your house, you're losing your rent money. You don't want to be doing that. So it came out of the zone. Now you'll see it broke away from the 200-day moving average. So see how it hit here a few times and it broke off. Now what that does is those moving averages, most traders will trade with them, right? So the reason it comes out of that zone is to entice traders. Watch this. Market makers, you look at them. See, look at them stepping in. Here's their candles, and they come back and they recover. See? They keep recovering all these candles. And you'll see, they go long, entice traders to go long. Bang, stop hunt. They go out again. They come around with the W. Bang, go. And that's what they do with the W. They trick you. They come out. Stop hunt rise. Boom. Comes down. Again, rises up. And it's going towards that. Nowhere near. It's just breaking that 200-day moving average. And that's because that entices traders to go long. Sends them down again. Right? And then it breaks away. So what this would do is that would imply people to go long. Now, remember, we see a blue candle. We know that from a blue candle, usually, when you see these blue candles on the hourly, properly printed, you'll notice that it starts to go down from there. Blue candle. Because it's trying to put volume in there and then bang. Right? It's not always the case. Like, you wouldn't put it on down here because that's just, that's just stupid, right? You should have your shorts on at the highest possible price, right? And you'd start to put your shorts on over here. So see what it does? It comes out the zone, breaks the 200, sits above, finds support. Now you'll see the 800-day moving average up here. This is our next step, right? They've broken these ones because what it's done is it's disappointed traders too much, right? So they need to keep market coming in the game. This is a game for them. If we don't bring players to the board, so that's why every time you've ever heard someone talk to you about trading or just because they have good trend lines and stuff like that, it doesn't mean that they're not saying that they're idiots, but having these trend lines and all those type of things, it's all useless because these market makers made up those trend lines. This is the game for them. You're playing their field. It's like football, right? You're coming in playing their game, and they want to steal the money off you. It's like gambling to a degree, but it's calculated gambling. But because they're moving pools of money. So when you get that around your head that they know all these tricks, right? And that's why they're sending it out of there. And that's why these patterns play out, is because they allow these patterns to play out with emotion, because they know that everyone's been studying these books for the last 20, 30 years. They probably wrote the handbooks for this shit, the market makers. So these are all your big financial banks and higher than bankers, the people that are running around with the money, the insurance companies and stuff like that. That's where all their money's getting controlled by the 1% of the world. So anyhow, we've come out of the moving averages, and now the last one is, look, we haven't come above this one, right? The 800. So we're still in the downtrend. 1 hit to the high, 2 hits to the high, 3 hits to the high. So if you went long there and it come back and it went up, right, and you were long still, and it went down, and you're like, because you went long here, and you're at a loss now. When it came back up here, that last time to hit, there was your point to go, okay, put a stop loss on behind me, so once we come up here, so I can't, or a trailing loss, a trailing stop, so it stops you out when, it trails you as you go up, and then it cuts you out, so then that way, if it failed on you like it would have, you didn't get stuffed up, right? And look, the last point where they try and get traders to go long, and then they just send it down, and bang, breaks, and look, consolidation at the EMAs, boom, see you later. Alright, so now let's go over to the play that actually happens, and then look here, comes out down, breaks away from the moving average, yeah? So that's that 50-day. Now this is when you want to be going long. When it comes down here, this one, so I will see, you think that there is long, right? But look at, you don't want to just go on the side. You want it to come up, consolidate, and start forming that W pattern down at the bottom of the range. And you'll see that there is a W pattern. So that could have been your long to go, right? Long. And you could have wrote it up to here. And when you're seeing the stop and volume come, you could have got out. But, so over here is still risky, right? But you could have got this side of it, because look, that is a little mini. Sorry about that. It's just delayed on me. There we go. See? Boom. How do we initiate that that's a W? See this? You can see the candles. See how they act? The candles act. They've got those little wicks at the bottom. That's how you know. Alright, so now let me show you the play that happened this week. This will make a bit more sense for us all. So the points we got out of today so far are W's form under the EMAs, M's form above EMAs, or at the EMAs, right? So, here we go, 17th of December, 13th. So this is about the start of, this is where we started our week. What day of the week? Let's have a look just to clarify. What was the Monday? Monday was the 13th, right? Okay. Now, we started here though, because this is when the market starts, right? This is American time, everything like that. So, we started the week. Okay, so remember, we're trending down, we've formed a W, and we've come up, right? Now, the start of the week, it felt good for the first second. There's our psychological highs and lows, these points here. So what I do is once I get them for the week and they're on there, I grab my horizontal line, I put it in nice thick red, and I put it there, and I put it there. I can't get it on the middle of the line with the lag that's occurring, but there we go. Got that one. Alright. So what it does is it comes out of your psychological high for the week, and it tricks us. So on a Monday, we don't trade Mondays or weekends. This is leverage trading we're talking about, because the market makers sleep. You know, they sleep, they do things, they have weekends. But this is an algorithm and a computer that runs it, but they initiate this shit, right? So they're not active on the weekends all the time. The whole market still runs on the weekend, and their program still runs, but they're not there, right? So it is a much more volatile, much more. You don't see these patterns form out perfectly, right? Because there's not all their pool of money there. So come out of there, it's dropped down. Now come down to the Tuesday. This is where you jump in, right? So what would have happened was, look at it like this. This looks a bit better when you go in. Like, you see that these moves are pretty big. So it came down from like 50,000, went up to the 50,000, touched that psychological high for everyone to induce traders. Remember, it's at 50,000. They would have went long. Bang, goes down. Now look where it comes down to. 50,000 down to 45,000. That's a lot. That's a big dip. Now, if you've got a leverage trade on, that's big money. Depends if it's times 100, times 2. We'll get into leverage another time, but that's massive, right? So now what's it do? It forms the consolidation and forms a W, right? Now what you would do is you actually say this is that W, and then you go down there, right? Now let me get out. I'm just using that pen because it lags, right? Now this here, you could have rode that up there from that side there, but that's not the trade you want to take. I'm going to show you the trade we would have taken. So what have I done to it? Alright. Man, it's hard to move my computer around with the stream on. Alright. Alright, here we go. Here's this play. Now remember this, because this is in our mind. This was us the other day. So do you remember it came around on a Wednesday, right? We call this the midweek reversal. So what's happened is it formed, look, up, that's the W formation, and look what it forms, the M. You can see there's an M there. There's a miniature M inside this. You know? And that goes down, right? So, and that's that. See, 1, 2, 3 hits to the high. 1, 2, 3, and that's that pulling back volume. You can see it clear as day here. Same thing. You could count 1, 2, 3, or that one as the third. So 1, 2, 3. Then it went down. Now, so once it went down, it come down here. Then we had that massive pump up, and I think that was on like the Thursday. Now, what that was it came up, and look what it done. The behavior. It came up, it's hit our 200 EMA, right? And it's made everyone believe, because Bitcoin, they were talking about it with the Fed tapering. Everyone was in the belief that we were about to go to the moon, right? So what's it do? Comes up, pulls back, consolidates, another hit to the high, third down, back up for a third hit, fails it, gives ourselves a pink candle, which implies that they're trying to, right? There's less volume coming in there. And then they initiate the downwards trend. And there we go. But that was your trade to see when it went up there. There was our M pattern up the top. Three hits to the high, like we said. And you noticed it was all at this EMA, and it bang, 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 and it came down. There was your trade. You would have been putting your longs on here. Oh, sorry, your shorts on here. Now, how do you know where it comes down to? Where's your target point? Well, it's going to come down and recover easily 80% of this, 50% of this candle. That's the first one. That's my first take profit zone I would have taken. Then you notice that they actually came down and they've taken 50% of this candle. Right? And that's where that whole move is. So they've catched their liquidity, because remember, to put that long on, they've went short. And they've went short up here and short up here and they're short up here. But they need to come back down and get their money. They pull liquidity and move it on. Now, also too, the people that went on here on Thursday and they were happy as Larry, they've took a long on, but they didn't pay themselves. So a trader who doesn't pay himself or her, they can be punished with the manipulation. It fucks with your head. Simple as that. That's what it does. It's to play with your head. And now look, see, remember this candle here where it starts and they've come back automatically to get that 80%. And then took it down. That's how you know that they might not be coming to get that pool liquidity for a while. Look, came back again. Up near and then this one here is up near the psychological high for the week. Bang, stopping volume, and just outside the 200 EMA. That was a perfect, easy setup to short that. Now, you know, when you look and it's already down here, then that's when a W could form down here and go up again, right? Under the EMAs, it could have formed a W and went up. But it looks like that's remember our pattern I showed you before? The M up the top. Now, with inside this, there's actual plays happening. So that. Now, is that play? And then that's going to go up again. And then are we going to come down even more? And then go our W over the weekend? Is that going to happen? Are we going to come up to here somewhere or up to near the psychological low? Right? This move and then come down? We don't know. So, anyhow, I'll let you know what day. So, I'll let you know a day when we're going to do this. We'll do this, or a night time, I should say. And we will make sure that we are actually, I'll show you the trades we're playing. I'll show you what's happening throughout the week, everything like that. But what we'll do is we'll do these every Tuesday, Wednesday, and Thursday. that's when I reckon we should do these. And then the Friday will be a day off, right? So every Tuesday, Wednesday, Thursday, at a night time of something like this at about 8 o'clock, I'll let you know the time. But we will go over the exact same thing. So make sure you bring your pens, notes. Let's really get serious about this, and we'll start to map out plays for the week. Like right now, I would not be doing any trades for the week. And then I will also set you guys up with a Bybit account, so you can start trading on there. Right now, I say that too. Don't trade on the weekends. Look, I'm in a little trade at the moment, just a tiny one though. So that's you don't want to be going stupid. Got $600 on this trade. I'm up $32 at the moment. I'm just playing around. Just getting in that mindset again. I've actually taken I stopped trading a lot because it takes up a lot of your it's a mental game, right? It's a big mental game, and when you're trying to invest, and crypto is very volatile, the emotions come in. I'll be honest, I'm not. Yeah, that's the hardest part. I'm actually pretty good at this, but the hardest part is dealing with my emotions. So yeah, I really advise you all that you start off with something small, and we'll get in and we'll get us an account on here, and we'll get you guys set up. All right, until next time, I'll speak to you all later. But yeah, thanks for tuning in, and yeah, we'll talk soon.